Geopolitical chaos is supercharging the US dollar, and most traders still don't see it coming. Now, imagine this. While the world watches headlines about tensions, oil, and military movements, something massive is happening quietly in the background. The US dollar is surging. The petrodollar system is reactivating, and major currency pairs like Euro USD and AUD USD are starting to shift direction. Today, you're going to understand exactly why this is happening, how oil prices are connected to currencies, what the dollar index is telling us, and where the market could be heading next. If you truly understand this, you'll start seeing the market in a completely different way. Welcome to our channel, where we discuss finance and financial strategies designed to help you build strong financial foundations, stabilize your current finances, and support long-term financial growth toward financial freedom. As written in The Art of War by Sun Tzu, a book focused on strategy and decision-making in times of conflict, in the midst of chaos, there is also opportunity. And this is exactly what we are seeing in today's financial markets. Now, let's begin from the very basics. First, we need to understand what has been happening with the US dollar recently. For most of 2025, the dollar was actually weak. Traders even called it a pet peeve. Now, pause for a second. What does that mean? It simply means traders didn't like it. They avoided it. They preferred other currencies because the dollar wasn't performing well. But here's where things get interesting. Over the past 2 months, the dollar made a strong comeback. It rose by about 4.40% from its January lows. Now think about this. In financial markets, a move like that in such a short time is not small, it's significant. This is where most people fail to understand the market. Things can change very quickly, especially during global uncertainty. So what caused this sudden shift? Here's the key idea. When there is fear in the world, war, conflict, uncertainty, investors look for safety. And historically, the US dollar is considered a safe haven. That means people trust it during uncertain times. This is important. Money doesn't just move toward opportunity, it runs away from fear. Now, let's break down the factors behind this surge. First, a new Federal Reserve chair was elected, and this person appears to have a more hawkish stance. Now pause. What does hawkish mean? It means they are more likely to raise interest rates to control inflation. And when interest rates rise, the currency often becomes stronger because investors want better returns. Second, markets started repricing expectations. In simple terms, investors began adjusting their predictions about the future. And third, and this is where everything connects, the petrodollar system. Now, let's slow down and explain this clearly. The petrodollar system means that oil is traded globally in US dollars. So if any country wants to buy oil, whether it's China, India, or Germany, they need US dollars first. Now think about this. If the world needs oil and oil needs dollars, then the world needs dollars. This creates constant demand. And when oil prices rise or supply becomes uncertain, that demand becomes even stronger. This one concept can change everything about how you view currency markets. Now, let's connect this to what's happening in the Middle East. There were talks between the US and Iran. Initially, markets felt a bit optimistic. But here's where uncertainty returns. Iran still wants to maintain control over the Strait of Hormuz. Now pause. Why does this matter? Because the Strait of Hormuz is one of the most important oil routes in the world. A huge percentage of global oil passes through it. If anything disrupts that route, oil supply is at risk. And when supply is at risk, prices rise. At the same time, Iran is maintaining its ballistic missile capabilities, another major point of tension. Now layer on top of that President Trump's tone becoming more pessimistic and a large marine fleet moving into the Arabian Sea. Now think about this situation. Are these real peace talks or are they strategic distractions? As Sun Tzu teaches, all warfare is based on deception, and markets hate uncertainty more than anything. Now let's connect this to oil prices. WTI crude oil is now moving back toward $95 per barrel. Now pause here. This number is not random. It's what traders call a psychological level. That means when price reaches this level, emotions kick in: fear, panic, speculation. If oil breaks above $95, it signals worsening conditions. And when conditions worsen, the dollar strengthens, because countries rush to secure oil, and they need dollars to do it. If you understand oil, you understand currencies. On the other hand, if oil drops below $90, that signals relief, less fear, more stability, and potentially a weaker dollar. Now let's move to the dollar index, also known as DXY. This index measures the strength of the US dollar against a group of other major currencies. Think of it like a scoreboard for the dollar. Recently, when US-Iran talks were announced, the dollar tried to pull back slightly, but oil didn't fall much, so the dollar stayed strong. Now, here's something interesting from a technical perspective. A bear channel has formed. Now, don't worry, let's simplify that. A channel is simply a range where price moves between two boundaries, a top and a bottom. Right now, the dollar index is moving between about 98.65 and 99.90. Traders use this range to make decisions. They either buy near the bottom, sell near the top, or wait for a breakout. Now also notice a wider range between 99.00 and 100.00. This is a more stable zone. And here's the key insight. If the dollar breaks above 100, momentum could accelerate fast. Now shift to AUD-USD. This pair shows the Australian dollar versus the US dollar. Recently, it broke below its major range between 0.6970 and 0.7150. Now think about this. When a range breaks, it often signals a new trend, and in this case, it's pointing downwards. Why is the Australian dollar weakening? Two reasons. First, even though the Reserve Bank of Australia raised interest rates twice, inflation data came in lower than expected. Now pause. Lower inflation sounds good, right? But for currencies, it can actually reduce the need for future rate hikes, and fewer rate hikes can weaken a currency. Second, the stronger US dollar is putting pressure on it. If one currency rises, another must fall. That's how pairs work. Now here's a key level. If AUD-USD fails to go back above 0.6980, it suggests more downside, and traders will start targeting lower support levels. Now let's move to Euro-USD. This is one of the most traded currency pairs in the world, and right now it's turning bearish. It formed a double top, which is a pattern that signals potential reversal. Then it broke below its moving average and a key pivot zone between 1.1540 and 1.1570. Now think about this. When multiple signals align, patterns, levels, momentum, traders pay attention. This suggests Euro-USD could move down toward 1.1475 or even lower to 1.1410. And if tensions continue, it could fall even further. This is how markets communicate, not with words, but with patterns. Now, let's bring everything together. The US dollar is strengthening, not randomly, but because of geopolitical tension. The petrodollar system is amplifying that strength. Oil prices are rising, pushing demand for dollars even higher. The dollar index is approaching key resistance levels, and major currency pairs like AUD/USD and Euro/USD are showing weakness. Now think about this final idea. In times of uncertainty, capital doesn't disappear, it relocates, and right now it's moving into the US dollar. So what should you do with this knowledge? Stay informed, watch oil prices, watch geopolitical developments, and most importantly, understand the connections. Because once you see the connections, you stop reacting to the market and start anticipating it. To quickly recap, geopolitical tensions are driving oil higher. Oil is increasing demand for dollars, and that is strengthening the US dollar across global markets. At the same time, major currency pairs are showing bearish signals, confirming this shift. If you found this valuable, make sure to like this video, subscribe